Good morning, good afternoon, good evening from wherever you watch me from. Welcome back to the channel, everybody. Have you ever spotted a trend and you want to ride the trend up? You want to join the trend, but you don't know where to enter? Have you ever wondered how you entered a trade? You decided to join the trade, you entered the trade, the market came back, take you out, and continued in the direction? Have you wondered how far market is going to retrace in a trend, in a trending market, how far market is going to retrace for you to enter? Have you wondered? Have you wondered why the market took your stop loss and then reversed to the original position, original direction where you were predicting the market? This is because you don't know retracement. You don't have idea of retracement, and this is what I'm going to cover in this particular video. So in this video, we'll be talking about retracement using Fibonacci tool. Fibonacci is a trend retracement tool. It's used to trade the trend. It's used to ride the trend. We all know that market goes through phases where the market is going uptrend, retrace, uptrend, retrace, and uptrend and retrace. The same way, one market is also going to the downtrend, the same thing. Downtrend, retrace back, downtrend, pull up, and downtrend and retrace. But the billion-dollar question is, how far is the market going to pull up, or how far the market is going to retrace back for you to enter? That is what most people find it very difficult to identify. This is why you have to master retracement. Retracement as a skill, okay? In trading, you must master specific aspects of the market, specific things, so that when you face different scenarios, different market environments, you know how to apply all these skills. So we're going to learn how to master retracement using Fibonacci retracement tool. The Fibonacci tool has different levels. The top level is the 0% level. So you can see there is 0 here. Can you see? The top level is the 0% level, 0 here. And the bottom level is the 100% level. So the idea behind this tool is that imagine the market moves from a point A and then all the way to a point B and have a retracement. Let's say the market moves up and retrace fully up to the 100% zone. It means the market is ranging. But we're using the Fibonacci tool to ride the trend, so we don't need the market to retrace fully 100%. No, the purpose of using the Fibonacci tool is for retracement on the uptrend or on the downtrend, which means if the market retraces fully up to the 100%, which means the market is ranging, we don't need the Fibonacci tool. So we use the 100% level and the 0% level to just trade ranging market. To just trade ranging market, which means in the ranging market, you can only apply the Fibonacci in that particular mode. But if you want to trade retracement on the uptrend or retracement on the downtrend, then we don't need the market to retrace all the way back to the 100% level. The market to retrace back to 100% level is either the market is going to range or the market is going to change the trend. The trend is reversing, which means the market has retraced 100%. It's likely the trend is going to go down. But there are other levels that you have to know. We have the 23.6 level. We have the 38.2 level. And we have the 50% level. And there is 61.8 level. All these levels are very important. But for retracement, our main focus is going to be on these three. Okay? Forget about the 23.6 level because that is for a very strong uptrend. Sometimes when the market is actually trending, there are different types of trend that I've explained in one of my videos. Let me discuss here. Market can make a very power move, retrace shallowly, which means a very steep retracement, and continue the trend. In that mood, we are going to use the 23.8 level. But we don't need that level because I don't actually advise my student to trade that level. I advise my students to trade only deep correction because if you are trading the shallow retracement, sometimes it is a lie. Market can just move up as if it's going to your direction and then retrace back to the 50% level or the 60% level, and then you have a losing trade. And in the market, our goal is to get at least more than of our trade or half or more of our trade to become profitable. But if you are just making simple mistakes, then it's going to reduce your win rate, right? Because of that, I don't advise my students to trade the 23 point something level. I only advise them to only trade a deeper correction. So in a trend, you can have uptrend, retrace, uptrend, retrace. I want only the deeper corrections, which means that our main focus is going to be on the 38 level, the 50 level, and the 61.8 level. 61.8 level. Most of the time, when the market passed the 61.8 level, it means the market is actually trying to reverse. The trend is trying to reverse, which means we don't ride the trend again. But we want the market to either retrace to the 38 level, 50 level, or the 61 level. So imagine that the market retraces back to the 50% level, and gives us a confirmation pattern. Then we take the market up. If the market does not give us a confirmation pattern, we don't take the market up. Which means that if the market is actually retracing to the 38, it means it's a normal correction. But if the market is going deeper to the 50 or to the 60 level, which means the market is having a very deeper retracement, which means like a channel. Okay, I explained one of my videos, so if you know what that video, you can go back and watch that video. It's like a channel. The market is retracing through a channel, which means the trend is up, but still it is not as a stronger trend as compared to if it's going to hit the 38 or the 26 level. So the 26 level, I don't advise you trade the 26 level, but I advise you trade the 38 level, the 50 level, and the 61 level. So let's see on the chart, the candlestick chart, and let's see raw live examples. So in this scenario, I'm going to use the MT5 to do the illustration. You can also use the same thing. You can also do the same thing on TradingView or any charting software. When you open any charting software like MT5 or MT4 or TradingView, we're definitely going to find a Fibonacci tool. So on my chart, you can see that on my line studies toolbar, I can find my Fibonacci tool here. Can you see Fibonacci tool? So I will click on my Fibonacci tool and I will draw it. I can draw it anywhere for you guys to see. Have you seen? So let me clean it. So you click on the Fibonacci tool. Guys, are you watching? Click on Fibonacci tool. You drag it from a point to a different point. Or this is the first move of the market. The market broke out of this zone. So you want to see how far the market will pull back. So you drag it from a point A to a point B, the last point where the market retraced. And as you can see, where did the market retrace up to? The 23.6 level, which means I wouldn't have advised you to take this trade because it is very strong trend. You cannot tell whether the market is going to pull back down to the 38 or the 50. You can have a losing trade. So in this scenario, you wouldn't have taken any trade. But can you see that the market retraced exactly to the 23.6 level and then it moved upwards, which means the Fibonacci tool is actually one of the most accurate indicators. Just that I don't advise you to trade the 23.6 level because it can be very dangerous to trade, okay? You are going to have a lot of losing trick. Your probability of winning will be lesser as compared to trading it on the 38 level or the 50 or the 60 level, okay? So please, don't be trading on the 23.6 level. Trade only on what? 38, 50, and 61.8 level. You see, I've been repeating, I keep repeating because I don't want you to go and use it on the 23.6 level and then you're going to have a lot of losing tricks. Though it works, but not every time. Let's see where it works. Example. So when you scroll to this part of the chart, you realize that the market is trending. The market was trending beautifully. Can you see, guys? That was trending beautifully. But this one is hindsight bias, okay? Because the market has already played. The market has played already. Let me change the weight. The market has already played, which means that you can see what is happening. But assuming that the market was now at this part of the chart, where this part of the chart has not been played and you are trying to enter the market here. So let me zoom it out. Good, you're trying to enter the market here. The question is, where are you supposed to enter? Where are you supposed to enter? So first you spot a pull back, a pull up, first move. Let me make it bigger. So you see first move, power move. You see a retracement, the market will retrace back, makes another power move. So the question is, where are you supposed to enter the next move? Because you see that the moment the high is broken, it means the market is what? On an uptrend. So you're waiting for the market to enter. Are you going to enter here or where are you going to enter? That is where the Fibonacci tool comes to play. So you go to your line studies, guys, are you watching? Go to line studies, you drag your Fibonacci tool and then you drag it from a point where the market retraces up to, where is it? Here. So from here all the way to the latest point. Can you see? This is the current high. So to the current high and you extend it. You assume that this market has not played. So let's see. Where did the market retrace up to? Where did the market retrace up to? Let me change the color so that it becomes very clear for you, okay? As I said, the color does not matter. The color can be changed anyhow to suit your own preference. So let me change the color to, let me go to lighter color. Maybe gold. Let me go to gold. So can you see where did the market retrace up to? You can see the market here in this scenario, the market retraced up to the 38.2 level. Can you see, guys? The 38.2 level gave us a confirmation pattern and then we enter the trade. So now let me create the Fibonacci. We don't need it again now. So now where are you supposed to enter? You enter here, you put your stop loss behind the pattern, and your take profit is what? 1 is 2. Always take 1 is 2, okay? You'd have taken a profit here, somewhere here, which means you entered here, take profit would have been here. This market would have come. You shouldn't be shaking, okay? Just make sure that it hits your profit target or it's your stop loss. So this is where you should have entered the trade. This is where you have to exit, okay? 1 to 2, and you're out of the market. So you join the trend, the market come back, you join the ride, and you ride the market up. Very, very simple, guys. You ride the trend up. So can you see that the market just retraced back to the Fibonacci level? Can you see? Just retraced back to the Fibonacci level, 38 level, and then immediately reverse back. So Fibonacci actually is one of the most accurate tools you can ever use, okay? If you know how to use it, if you know what you're using it for. But what if you missed this particular entry and you are waiting for the next pullback? Let's see. Assuming you missed this entry and you're waiting for the next pullback, this is what you have to do. So now the market has gone and left you, right? So you saw, let me clean this. So you saw the market make another power move. So this is the latest high. You're waiting for the market to retrace again. So the same thing. You draw your support line. This is a high which is broken. But I don't know how far the market is going to retrace. You cannot just enter here. It's very shallow. So that is when you have to go for the Fibonacci tool again. So you drag a Fibonacci tool from a point, the base, to the highest, okay, to the highest point. So to the highest point, you extend it. Now, can you see? 0, 23, 38, 50, 60, 61. So where did the market retrace up to? As you can all tell, the market retraced up to the 60 and the 50 level. Can you see? It gave you a very good rejection pattern. Can you see rejection? Rejection, rejection, rejection. Can you see? Let me zoom it out, guys. Let me just zoom it out so I can see it well. So can you see? Rejection, 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 rejection. And now you enter. Where are you supposed to enter? Yes, where will you enter? Let me clean the Fibonacci. We don't need it now. So you put your buy order here, just after the pattern. Here, that's where you have to enter, okay? That's where you have to enter. Your stop loss behind the structure. And you take profit 1:2, always 1:2, and you're out of the market. So you take profit here. Very simple. And then you take your time and you ride the trend. Can you see how it's very easy to trade the Fibonacci retracement tool? So guys, can you see how it's very easy to trade the Fibonacci retracement tool if you know what you're using it for? So you see, we've taken about 2 trades, or I think 3 trades here, and we use the Fibonacci tool to do that. Because we use the Fibonacci tool to determine where the market is retracing up to. Sometimes it can retrace up to the 23 level, sometimes it can retrace up to the 38 level, sometimes the 50 level, sometimes the 61 level. We can't tell. But all what you're waiting for is that you're waiting for a confirmation. If you don't have a confirmation, you don't take any trade. The market must retrace up to the 38 or the 50 or the 61.8 level. That's what you're looking for. And then we look for a confirmation pattern. If there's no confirmation pattern, we can't take any trade, guys. You must always get confirmation pattern before you think of even taking the trade. So without confirmation pattern, we can't take the trade. We take the trade when you get confirmation. That's why most people get it wrong. They think that when the market gets to the 38, you must just hit buy or hit sell. No. You must wait for a confirmation candle. You see the same confirmation we found in the first trade, the same thing in the second trade, the same thing in the third trade. Can you imagine? So if you know what you're doing, the market sometimes keeps repeating itself. Some patterns keep repeating once in a while. So you must be able to exploit these repeatable patterns and make money out of the market. So Fibonacci is actually a very good tool. So let's go to the chart and let's see more examples so that you can become more familiar with this Fibonacci tool. So as you can see, this part of the chart too, good. You see, the same chart. This part of the chart, market was also trending. Can you see? Market was trending. So where are you going to enter? You've seen that the market made some move. Market made a power move with 3 shallows. So let's assume that this is not even part. Let's say at this moment you didn't realize the market was trending. So let's draw our support area here. Let's say you didn't realize the market was trending. Assuming we scroll back, or we see support area there. Good. You see, guys, I told you. Yes, I told you. Can you see? See support area here. So the market broke out of the support and you realize that okay, and the market is in a trending mode. Market makes a pullback, a power move to the upside, power move to the upside. The market retraced back, made another power move to the upside. Where is the market going to retrace up to, guys? Remember, I told you that if the market makes 100% retracement, it means the Fibonacci tool is going to, it means the market is going to win. Do you remember? Good. So let's see. Assuming we use our Fibonacci tool here, can we get 100% retracement? Let's see. From here all the way up to this side. Can you see? It has passed the 60% level. But it was a very risky trade. So would you have entered any trade here? No, there is no confirmation pattern. Let me clean the Fibonacci level. There is no confirmation pattern. Moreover, it has even passed the 60 level too much. So are you going to enter your trade here? No. If you enter this trade, you're going to have a losing trade because there is no confirmation pattern. See this big candle. Where are you going to enter? Guys, tell me. Here? Are you going to enter here and ride the market up? No, you can't do that. It tells you that the market is likely to revert because this candle is too big. Assuming the market came down a little and gave a confirmation, you would have taken a trade. But this one, no confirmation, so no trade. So guys, can you see that? Can I just be blindly be using the Fibonacci tool? You must know what you're using it for. You must know where you're supposed to enter. You must know the pattern you're looking for. If the pattern is not there, you do not use the Fibonacci tool. You don't use it. You only search for a pattern you're looking for. You see this market, though, assuming you entered mistakenly, you would have gotten a winning trade. But I don't advise that. If you are a professional trader, you are not gambling. You are trading based on a particular system. You are trading based on our trading system, which means that we don't go against our trading system. We are professional traders. We are trading from home to make a living. Maybe you are a doctor, you're a lawyer, you're a teacher, you want to quit your job to become a full-time trader. So you can get the freedom we all get. Then you must follow what? A particular system. You're not gambling. So by mistake, if you entered, you would have gotten a winning trade, but you're going against the principle. You don't do that. So guys, these are just examples that I'm showing you here. It's up to you to also go to your chart, okay? Go to your chart and practice. Go to chart and practice using the Fibonacci tool. Open any chart, open your MT5, open TradingView, search for Fibonacci tool. Try and practice, because practice makes perfect. Don't just learn any concept on YouTube and then you just go and use your hard-earned money you put in the market and keep losing, guys. You have to practice and master any concept. This is a concept I've explained to you. So it's your job to also go home, go to your desk, and then what? Practice on your chart to see that, okay, what this guy is talking about. Do I see it? Yes. Have I mastered the whole skills? Yes. Before you even think of using your money to trade this, okay? So that'll be all for this video. I hope you've enjoyed. Please like, share, and subscribe to my channel, and always come back here for better education about trading. See you next time. Bye.